So to deal with the the problems that we've identified, generally regulation of banks, the financial sector generally has been toughened up since 2008 for fairly obvious reasons. In the UK, the financial sector's regulation, part of the problem in 2008 or in the run-up to 2008 was that after the Bank of England had been made independent in 1997, regulation of the financial sector had been taken away from the Bank of England, or was partly responsible, to avoid the Bank of England perhaps becoming too powerful. Now, regulation of the financial sector essentially is concentrated in the hands of the central bank, in the Bank of England. And there are two. I mean, you don't really, if you're doing education, you don't need to know the details of this. But there are two main arms of the regulator that live inside the Bank of England. One is called the PRA, which stands for the Prudential Regulation Authority. And that's responsible for the microeconomic management of individual banks, looking at a single bank to see whether or not it's got enough cash and that type of stuff. Then you have the Financial Policy Committee, the FPC, which looks at the overall macroeconomic position, looking at the banking system as a whole. So what's been done, what's been done over the last sort of 10, 15 years to try to deal with some of the problems that we've identified. One thing that's been done is there are tougher controls over. So one is kind of more restrictive requirements on how much cash banks have to hold. So there are tougher controls on cash and other assets that banks have to hold, and that's tested through things called stress tests, where banks are put through what if scenarios to show that they would be able to cope with a sudden run, a downturn in the economy, and so on and so forth. Secondly, at an individual level, there have been controls over the types of loans. In particular, how much you can borrow relative to the value of your asset. So there are controls over the deposit that customers have to give. This is a response to kind of in the run up to the financial crisis. Northern Rock was lending 125% of the value of a house. So if you wanted to borrow money to buy a £200,000 house, Northern Rock would lend you £250,000. That's massively risky because obviously, if you suddenly can't pay back, then they're not going to be able to get their money back. So the proportion of the value of a house, for example, that you can borrow has dropped significantly. It's only recently that we've returned to an era of 100% mortgages, where if you want to buy a £200,000, some banks will now lend you £200,000. But again, that's the exception rather than the rule. So again, that's a form of regulation. To try to reduce the risk of runs on banks, where customers want to get all their money out, what the government's done is increase the guarantee on the amount of cash that they will automatically pay you back. So before the financial crisis, this was around £30,000. Now, the first £85,000 of money that you hold in any given bank is guaranteed by the government. So if you hear that your bank is getting into trouble, you now know that up to £85,000 of your money is safe, it'll automatically be paid by the government. Therefore, that reduces the danger that you're then going to run in there and try and take your cash out. And fourthly, there's been attempts to kind of increase the amount of information that's available to customers. So there are much clearer laws these days on what you have to be told, and you've got a sign to say that you've been told it. If you phone up, increasingly you'll be told this call may be recorded for kind of security, kind of training purposes, but also it means they've got a record of what conversations they've had with you to prove that they've told you what you needed to know. If you take off. If you take out a loan these days, there are things like kind of cooling off periods. So if you feel that you've been pressured into taking out a financial product that you don't want, you have an automatic right to cancel it. There's been recent regulation on things like subscriptions. Auto renewal has been the extent to which subscriptions can be auto renewed has been reduced. They've got to tell you in advance and so on. So there are more protection trying to make sure that you are that you're well informed overall. So taking all those things together, there's and fifthly, kind of control on bonuses. There've been regulations trying to make sure that these are paid over longer periods of time, so that you can't just make the ability to make a huge bonus based on just a very short amount of kind of speculative activity is less. So therefore, in an attempt to try to avoid the problems that led to the financial crisis, a lot of controls have been put in place to try to make the banking system both safer at a macroeconomic level and to work better for consumers as well.